The European currency managed to reach one-month highs but failed to consolidate above 1.0866. As a result, the euro came under pressure and faced a sell-off. Yesterday's statistics were rather upbeat. The economic sentiment indices turned out to be well above analysts' forecasts. The German ZEW headline number showed a rise to 16.9 points, while the indicator for the euro area advanced to 16.7. However, the market reacted negatively, which came as a surprise. This casts doubt on the euro's continued bullish run. After all, despite rumors about the Fed's possible monetary policy shift, the regulator is expected to stick to an aggressive path of interest rate hikes at the February meeting. That is why the euro still cannot break above 1.0866 and continue an uptrend. Now let's take a look at today's macroeconomic calendar, which is full of important releases. Data on inflation in the UK will be in the focus of market participants. On an annual basis, the inflation rate is anticipated to be 10.5% in December 2022, down from 10.7% a month earlier. The monthly indicator is forecast to come in at 0.4%. If the readings are above market expectations, the British currency will have every chance of extending gains, as the Bank of England will be forced to keep monetary policy tight. The euro area is also set to release statistics on inflation. Euro area annual inflation is expected to be 9.2% in December 2022. The core consumer price index is projected to rise to 5.2%. Compared to the previous month, the CPI is forecast to slide by 0.3%. At the same time, the market reaction to this report will hardly be strong. Although the European Central Bank places great emphasis on inflation, changes in monetary policy are unlikely. ECB members have recently noted that the regulator will keep fighting painfully high inflation, thus keeping its policy unchanged. Furthermore, traders should take notice of data on consumer and producer prices, as well as retail sales from the United States. As for the US producer price index, economists estimate a decline of 0.1% in December, compared with an increase of 0.3% in November. US retail sales are anticipated to fall by 0.8% in December. If the latter are in line with forecasts, the euro may well edge higher. If the reading increases, the US dollar will most likely post steep gains against both the euro and the British pound. A rise in retail sales will drive inflation up, thus allowing the Fed to stick to its aggressive path. Besides, Philadelphia Federal Reserve President Patrick Harker and St. Louis Federal Reserve leader James Bullard will speak today. From a technical point of view, the euro has corrected considerably. The level of 1.0769 acts as an intermediate support level formed in the Asian session. It is also worth paying attention to 1.0817, where there are moving averages. A false breakout at this level amid upbeat data from the euro area will create a strong sell signal. In this case, the euro will slide to 1.1769. If the price fixes below this mark and tests it from the bottom up following positive statistics on US retail sales, the European currency will dip down to 1.0728 and then 1.0687. At this level, I recommend going long on a rebound. Long positions at 1.0728 and 1.0769 can be considered only in the event of a false breakout. Alternatively, if the price consolidates above 1.0817 and tests it from the top down amid a decline in US retail sales, it will be possible to buy the pair with a view to reaching 1.0866. In this situation, the euro will have a chance of jumping to 1.0931 and 1.0970, where it would be a wise decision to go short on a rebound, counting on an intraday correction of 30-35 pips. Speaking of the British pound, the focus of market players is on UK inflation data. If consumer prices rise, the price will break through 1.2299 and consolidate above it. In this scenario, a buy signal will be generated and the pound sterling will advance to 1.2350 and probably 1.2399. In the area of 1.2400, traders are recommended to go short on a rebound with a view to catching an intraday correction of 35-40 pips. A false breakout at 1.2299 or 1.2350 will create a sell signal, thus dragging the British currency down to 1.2245. At this level, bulls are expected to regain control of the market. Its false breakout will make it possible to open long positions. Otherwise, if the price breaks through this mark and tests it from the bottom up by midday, the volume of short positions will increase further. In this situation, the pound sterling will dive to 1.2194 and 1.2146. At the level of 1.2146, traders may go long on a rebound. Long positions at 1.2194 and 1.2245 can be considered only in the event of a false breakout. In this case, an uptrend will remain intact. Good luck!